kind of make sense of them and use them. As we get going today, there's a few technology tools we're going to be using. The first is a poll. So I'm going to use a poll question right now. You should see on your screen a poll question that asks whether or not you've been part of one of our programs, our Building Business Acumen program. If you've done it this year, that's A, all the way down to, you know what, Brent, I've never been part of a Building Business Acumen program or an Acumen learning experience. It's great to have you here. Even if you haven't been part of it, no worries. This is open enrollment. Anybody can participate. Obviously, if you're a participant in one of our programs, we invite you for the next 2 to 3 sessions to come and participate in these webinars. It's a great way to take the concepts as well as the tools that you learned in our program and be able to apply it by listening to earnings calls, capturing information that you can use, whether it be you as an individual investor, being more comfortable listening to your own company's earnings calls, or maybe you're in a sales role and you're selling into companies. You want to understand and kind of differentiate yourself within the organization that you're selling into. So it looks like everybody's responded here. As I get my responses, it looks like, the majority of it have been part of it. 29% haven't. Well, hey, I hope we can create enough interest that you're going to want to come back and be part of our Acumen learning experience. Well, not only do we provide a business and financial acumen, but we provide it with many organizations across the globe. In fact, we have the great honor of being able to partner with 30 of the Fortune 50, many of the Fortune 500, providing this topic, business and financial acumen. So I hope I can create enough interest, enough value that you'd be interested in either the personal development with an online learning experience, or maybe you and your team has an interest in getting more savvy around your business, your customers, those you're interacting with as you kind of try and execute around strategy within your organization. Well, the second tool that we're going to be using is the chat box. So I want to make sure everybody has that open and make sure you have it set to send to all attendees. That gets it to everyone. Ginger, correct me if I'm wrong. I think it's all the attendees, right? Go ahead and open that up. And let's go ahead and type in where you're calling in from. I'm calling in from Salt Lake City, Utah. We're just a little bit south of there, about an hour south of there is where we're located. We're right at the base of what's called Mount Timpanogos. On the north side of Mount Timpanogos, a large mountain part of the Rocky Mountains is Sundance Ski Resorts. If you ever heard of Sundance, we're just at the other side of the mountain from there. Now, mine doesn't have an option for everyone. That's interesting. Looks like everybody else's. Well, it looks like yours is working. Mine may not be working. Looks like we got people from kind of all over here. So a lot of the states, anybody coming from outside the United States here? We got Houston. Oh, Santiago, Chile. Excellent. Welcome, welcome. The UK. Excellent. So late in the night in the UK. Good to have you here. I hope I make it worth your time to stay up late and go through this program today. Well, the last question that I have is, as we get going, you've come to a program on how to listen to these earnings calls. And a question I have for you as we start our program is, when is the last time you listened to an earnings call? I've got a quick poll question. Is it something you've done this year? Is it something you've done last year? Oh, you know what, Brent? It's been a while. I haven't had a chance to do that. Or you know what? I've never done that. Or for some of you might say, hey, I'd rather go to the dentist than to listen to EBITDA, free cash flow, return on capital employed, and other metrics your executives might be talking about. These earnings calls happen on a quarterly basis for publicly held companies. They're actually required by law to submit to the Securities Exchange Commission, what we call the SEC, their financial performance on a quarterly basis. Now, the leaders of these companies are quite sharp, and they will take that time and they will have an earnings call where they get a chance to not just submit the financial data and information, but get a chance to kind of talk about their strategy, where they're currently at, where they want to go, and how they're going to get there. And that's what these earnings calls are. Now, if you're dealing with a privately held company, they're not going to necessarily have a public opportunity for you to get information about those companies you're interacting with. That being said, if your company is privately held, often they'll do like a quarterly town hall meeting or kind of a quarterly update on their financial performance. This is the type of information, the type of conversations you want to get more comfortable around. What we find is in our work, over 20 years working with some of the best companies of the world, is that senior executives executives are doing everything they can to squeeze it all out of the financial statements, trying to create greater profitability, greater cash flow for the organization. What we find, though, is we work with these great companies, their employees are functionally brilliant. You know more about your role than I will ever understand. That being said, we tend to kind of go through our careers with blinders on. Very focused. If I'm a trainer, for example, so I'm very focused on training and the customers I'm training towards. How often do I step back and get that big picture perspective? That's what these earnings calls are all about. Stepping back for a moment. If it's your own company, it's a great way to really differentiate yourself, to understand what's going on with the company, and then with that information and your functional expertise, go back and say, what can I do to drive to the results we're trying to accomplish? How do I create greater alignment from my day-to-day decisions to the success of the organization? If it's a company that you're selling into, boy, I can't think of a better way. As I'm talking to my customers, the more I understand about their business, then I help them make a business case as why a partnership with Acumen Learning will help drive to the results that they're trying to accomplish within the organization. Now, for some of you, it may just be, I want to get better at this because I want to understand the companies I'm investing in. I can't tell you a better way to understand. There's all sorts of technical trading metrics and measures. You talk about betas, you talk about PE ratios, all the different things you can look at, volumes, etc. In the end, if you can fundamentally know if the company's strong or not, if they got a strong balance sheet, what they're working towards, you can actually be more predictive in what the potential success of that organization is going to be. So no matter how you want to use this, this is absolutely a great capability to develop within in your career, wherever you're located. As I look at this, it looks like many of you have listened to calls this year, about 62% of it. It's been a while for some, and a small percent, only 8% of you have never come or never had a chance to listen to those earnings calls. So my goal is to help you kind of be more comfortable. So let's jump into our discussion today. I want to start by talking about some unique statistics. As you think about, even though every quarter these earnings calls are present, they're available. You want to listen to any publicly traded company, you can access. I'll show you how in just a moment to access that. But even with that, this statistic that comes from the Harvard Business Review says that 95% of employees don't understand their company's strategy. Can you believe that? Think about your business. Do you think that's a high or low? You may be much sharper in your organization. We're a small organization, Brent, so we get a chance to really understand what we're working for. That being said, even if it's 50% of your organization that doesn't understand your core corporate strategy, how difficult would that be? Imagine you're in with a team, some sport, your favorite sport, you're working together, and all of a sudden we don't know what we're trying to work toward, what the goal, what the outcome might be, how difficult it would be to be successful in that type of organization. Well, here's another stat that's kind of a challenging stat as well. It says 90% of employees don't understand their company's important business metrics or measures. What is free cash flow? Why is it important? How can I impact it? What about this metric called EBITDA? Why is that important? How should I think about it within my role? Well, folks, one of the greatest ways you can get more comfortable around these is to listen to these calls. And I've got a tool I'm going to provide for you at the end of our program today. I'm going to walk you through it, through the slides, and then give you that as a resource. And here's my commitment to you. As you take that tool and use it over the next 2 to 3 quarters, you will truly differentiate yourself. With those statistics in mind, imagine you're the CEO of General Mills, the company we're looking at today. Think of the challenges that General Mills is faced with today. You're dealing with supply chain issues. It's a company that's been around for over 150 years. Your products are sold in 120 different countries. The supply chain is just accessing raw goods, raw material has been difficult, not to mention inflationary constraints. And you're trying to get your employees all on board to execute around a strategy. And if those stats are truly 95% of your employees don't understand what you're talking about or your core strategies, and 90% of them don't understand the key metrics, how difficult that would be. So the question really to ask yourself is, what is it Mr. Harmening really wants everybody to understand? What is it he wants his employees to understand, to get high level of execution within an organization? What is it he wants his customers to understand? For example, as he's increasing pricing because of inflationary constraints, how does he keep customers coming back as costs continue to rise, and in return he's increasing his price? What about his shareholders? What does he want them to understand or need them to know? And then finally, any partners that he's working with. Well, that's what these earnings calls are all about. It's a chance for them to get a better understanding of what's going on in the business, what we're trying to accomplish, and how we're going to get there. And then each of these varying groups understand, so what's my role in it? How should I think about it? So my guarantee to you is this, is we've done, like I said, we'll do about 1,000 learning sessions a year. And invariably, what we find really moves the needle around people's understanding of business is to listen to these earnings calls and to engage around them. Take the 5-driver model that we introduced in the course along with a couple tools, and in about an hour time, once a quarter, be able to understand what your company is trying to accomplish and how you can impact it. My guarantee to you is this: if you take this tool and you use it for the next 2 to 3 quarters, you absolutely will build your credibility in your organization. People will start to say, how come you know so much about our business? You'll build your career because they'll say, hey, this person understands what we're trying to do, and she can really get us to the next level. Not only that, you'll build your company, help get greater execution. So that's my hope and interest today, is to provide you the tools, the resources, and the process to help you go through that. So with that in mind, let me give you the process. There's a 3-step process you look at listening to these earnings calls. Number 1, you got to prepare for these earnings calls. Number 2, you got to analyze. And finally, you got to apply it, take it and use it. So let me kind of walk you through those steps real quickly. The first one I have there is to prepare. The prepare phase, let me start by just giving you a kind of Earnings Call 101. In the document I'll send to you, or you'll have access at the end of our program today, it walks through the basics of an earnings call. Number 1 is you typically have these prepared remarks. Now, interesting, General Mills fiscal year, anytime they talk fiscal year, what's their financial year? Now, most company has it from January to December. But some companies, based upon their industry and their global reach, et cetera, multiple reasons as to why, they have different timings of those. So General Mills fiscal year ended the end of May. So January 1 started their 2023 fiscal year. So you're basically getting the end of year experience here as we walk through our metrics today. Now, what's unique about theirs, rather than have the prepared remarks and the question and answer together in one meeting, they had 2 separate things. They send out the night before their earnings call, where they basically do the Q&A. The night before, they send out a recording of their prepared remarks along with some other financial information. But every one of these calls are broken up into those 2 pieces. One is the prepared remarks. That's where the executive team communicates to analysts, to investors, etc., their financial performance. Now, it's not required by law. There's no regulation that they have to do this. So you're always going to get a bit of what's going on in the organization, where we want to go, but there also is going to be a little bit of a marketing pitch, a little bit of kind of, this is why you should stick with us, investors. Here's kind of where we're going and why you want to continue to be with us as we move into the future. That's the prepared remarks. Then following the prepared remarks, you have the investor community. These are analysts of the large investment firms. They go through and ask questions, Q&A around, hey, you talked about your margin increasing by X%. Tell me, what are the factors that contributed to that? Or wait a second, you said this, but yet as I look at your numbers, it says something different. Can you help give me more color on why that might be? In the end, their goal is to try and figure out what's really going on, because they're going to write a report, send it to their investors, and their whole goal is to be absolutely correct. They want to predict whether or not you should hold on to a stock, whether or not you should buy more of this stock, or whether or not you should sell that stock. So that's the call itself. Now, for us as individual investors, rarely, and I can only think of one company that gives you a chance where an individual investor can ask a question. It was Tesla. And they actually ask for questions before, and they'll kind of go back and forth between analyst questions and an individual investor's question. But for most of us, we won't get a chance to do that. That's what those calls are about. So how do I prepare for those? How should I think about my preparation for that? Well, what you need to do is there's 3 steps around the preparation. Number 1, you got to locate the call or the transcript. So let me show you how to do this. I'm going to go ahead and jump to another screen here, and you're going to go to this great website. You may have heard of it. It's called Google. And you jump in, and all you're going to do is type in the company you're looking at and what information you're looking for. So for me, I'm going to type in General Mills. And I can type in quarterly report. You see, I already got that there. I could look at like webcast. I could look at Q4. Any of those are going to get it. So I could just type in earnings calls. In the end, I type that in, and it's going to take me to some search criteria here. Now, what I'm looking for is I'm looking for the website that is owned by the company. There's a number of third-party businesses that will do little reports on that. So, for example, you got AP News doing some stuff, TheStreet.com, Yahoo.com, Motley Fool is a financial organization. I want to find it from the company itself. So I'm looking for something that says General Mills. You see right here, I got General Mills. I go and click on that, and here I'm into their reporting information. Now you'll notice what I get. So here's the quarter information. Now this is their full year because it's Q4 for them. Remember, it ended in May. And you've got a bunch of stuff. You've got the presentation. If I want to see their slide deck that they use for the call, it's right here. If I want to see other information, maybe I want to get the press release that they sent out, it's right there. Now, the most important things you want to access is here's that recording of their prepared remarks. I click on that and you can hear their CEO and their CFO talking through their business experience. If I want to get the Q&A webcast, that's where the analysts ask the question. I click on that, I'm able to access that. Not only that, they actually give you a transcript of what they said. So word for word, what their Vice President of Investor Relations communicated, Mr. Harmening, as well as Mr. Bruce, all spoke during this period of time in their prepared remarks. Here's what they said. So it's a great way to access their information. The last place is here's their annual. This is their SEC file, what they call a 10K. This is going to provide all their financial information. If I click on number 8, item 8, I'm going to jump in. I'll be able to see their financials. Here's their income statement. Here's their balance sheet, etc. So if I want to access the information of any company, what am I going to do? I'm going to jump to Google, type in the name of the company, and say quarterly or annual information, annual earnings, annual report, etc., and you'll get access to all that information. Now, if it's prior to the call, you come in, it's not going to give you all this information. Prior to the call, it's going to give you a place where you can register for the call itself. It'll look something like this. Prior to the call, you'll come in and it'll ask you to register for it. So you got to register. You can register as a guest. You put your name in, etc., and then it'll log in and it'll give you an invite, just like you got for this webinar. You'll get an invite for the webcast that says, "Okay, on this date is when we're going to hold that," and then you click on that and you can listen to the call itself. Once the call's already happened, you're going to get this, where all the information is provided for you. Okay. So that's how you access the information. Once you've accessed the information, your next step is to review your notes from the past calls. Now, if you've never done it before, you're not going to have any notes. That being said, as you do this consecutively, the tool that I'm giving you access to today, all you're going to do is review what you jotted down in the notes in the prior quarter. It's always great to see kind of what they said they were going to do so that when you listen to the call, you can see how consistent it is. Of course, the market wants to see that consistency. They want to see opportunity. They want to see growth from what they said they were going to do. They want it to be even better. So that's what you're looking for. What did they say they were going to do? So when you listen to the call, did they really do that? Then the last thing I recommend is to do this with the team. It's a great activity. You can do it by yourself. But what you find is if you do it with your colleagues, your peers, if you happen to have a team, do it as a team activity. That within an hour period of time and interacting with each other, your team will have a much greater understanding of what's going on in the business and how you can have an impact within that. So I often recommend to do that as a group. So folks, that's the prepare phase. Pretty simple. Access the information. If you have any notes, review it, and then get ready for the call with your team. The majority of the work happens in this analyze phase. And so what I want to quickly do is do a quick review. Open your chat box for all of you that have been through our program. If you hadn't, you can take a guess at it as well. But I want to give you this simple framework. In our program, if you come to any of our programs, you'll be familiar with this 5-driver business model. I'm going to suggest to you in our over 20 years of experience working with some of the best companies in the world that these are the 5 fundamental drivers every company focuses on. Cash, profit, assets, growth, and people. Now, the foundation of the 5 drivers are the 3 financial statements. Statement of cash flow. If I want to know what's going on with my cash in a company, I'm going to look at the statement of cash flow. If I want to know what's going on with the financial profitability of the company, I'm going to look at that income statement. And if I want to know what's going on with their assets, how financially strong they are, I'm going to look at the balance sheet. So as a quick review, open your chat box if you would, for all of you who participate. Let's fill in the blank. Cash is blank. When we talk about the importance of cash in business, cash is blank. What would you fill that in with? Cash is king, cash is queen, cash is oxygen supply. I love that, Bailey. Absolutely. It is the lifeblood of a business. If a company runs out of cash, they will die. We call that bankruptcy. And during the pandemic, you had companies who absolutely struggled if they were running out of cash. A great example of that is Boeing. For those of you who happened to go through Boeing with us last year, last year this time, I think it was last year, maybe it was the year before, but they had to borrow $42 billion of cash to stay alive because all of a sudden nobody wants new airplanes because nobody was traveling during the pandemic. So cash is king. It's vitally important. When you look at cash, there's two key metrics companies look at. One is called the cash and cash equivalent, or just their cash position. The other is the cash flow. Now, of course, you want your cash flow, how much you generate every month, every quarter, every year. You want to see that increasing. The cash and cash equivalent, you want to think of that kind of like a savings account. As a publicly traded company, investors don't want us just to hold on to cash. What do they want us to do with their cash? They want us to invest it in the company and build out more assets. They also want us to give it back by paying dividends, etc. So that cash and cash equivalent kind of goes up or goes down based upon strategy within the organization. If I want to see what was going on with the cash position of General Mills, I jump into their cash flow statement and see what's going on, if it's going up, down, or what's happening there. The next key metric we talk about, this is probably the driver that gets spoken about more than any other drivers in the business. That and growth tend to be the top two drivers that most companies talk about. When you look at that profitability, there's all sorts of metrics around profitability. There's other terms for profit. So let me put those in the chat box. Companies can they'll use the term profit. They'll also use the term earnings as well as income as the same thing in business. From a financial perspective, those are the same metrics. Well, for those of you who've been in class, if I wanted to grow profitability, there's two things you could do. You could increase one lever, or you could decrease the other lever, and have a positive impact on my profitability. Anybody happen to remember what those were? How do I grow profit within a company? Increase one thing, decrease another. Anybody happen to remember? Give you a hint. It has to do with that income statement. There you go. Increase our sales. Yep. Increase our sales or revenue. By the way, those are the same thing. Anything I can do to grow my sales. Now think about it from a General Mills standpoint. All of a sudden my costs are not decreasing. So this thing you can reduce is your cost. At General Mills, their costs are increasing because of inflationary pressures. Well, so what do? They increase their sales by increasing their price. Now, how long can I do that? How long are we willing to pay more for cereal than we did before during this challenging time as we have inflationary pressures around us? When is that going to break even where people are saying, no longer am I going to pay more for those products? So far, they've been able to increase price to actually reduce the impact of inflationary costs as that increased cost happens in the organization. We'll show you that in just a moment. So yeah, those are the two levers. Anything to grow your sales by or reducing your costs has a positive impact on profitability. Some of the key metrics you'll hear in business, you're going to hear stuff like gross profit. You're going to hear stuff like operating profit. You're also going to hear stuff like EBIT. Extra credit points if you could put in the chat box what EBIT stands for. I'll give you the hint. The E stands for earnings. What does EBIT stand for? Also, if you hear EBIT, sometimes you might even hear EBITDA. Of course, then you have net profit as well. These are all profitability metrics. Now, of course, as a business, what do they want us to do? They want us to grow profit every month, every quarter, every year. Karen, you got an extra credit point there. Earnings before interest and taxes. That is the same thing as operating profit in most companies, and it's often the metric that analysts are looking for. How profitable are you from your core operations? What is what they're looking for. Okay, we talk about assets in our Building Business Acumen program. As you talk about assets, what are we talking about? Well, in business, it's anything you own or control which has value. As you think about General Mills, what do they own or control which might have value? Put it in the chat box. Think about what they do. They provide food. Obviously, we all know of their cereal. They have all sorts of products out there. Various doughs, pie crusts, all sorts of cereals, like I said. Significant. So what do they have? They have factories, absolutely, because they're manufacturing equipment, machinery, buildings, land. What about this one? Do you think they have any of this? Yeah, in a moment I'll show you. They actually have cash, right? They have reputation. They have brand. All these things represent the assets of their company. Now, what do investors want a company's asset? They like to see them increase year over year. Why? Because I have more assets to develop more products that allow me to sell more products or services to my customer. And when we talked about assets, we talked about what we call financial asset strength versus asset utilization. Asset strength represents what does a company have that allows them to create greater profitability and cash flow. Versus utilization is how do I deploy or how do I use what I have to create greater profitability. And there's a balance between the two. During the pandemic, a lot of companies were holding on to cash, trying to protect themselves from a downturn. Well, if I'm holding on my cash, I'm not deploying it, so my utilization is going to decrease. Basically, as I increase my financial strength, I'll actually see a decrease in my utilization, and vice versa. If I see an increase in my utilization, I build out all my asset, take all my cash, use it to grow my business, I'm actually going to see a decrease in what I have and create greater financial risk. So this is balance that the executives are focused on how much do I hold on to maintain a strong financial position versus how much do I deploy to grow and expand our business. Now, of course, growth is something we all are very familiar with. We talk about growth. This is if profit, like I said earlier, profit and growth probably get more time and attention than any of the other drivers in a publicly traded company. Of course, coming out of the pandemic, there's a lot of companies looking for growth, greater expansion. Now, the challenge with that, what's impacting growth in today? Today, in fact, the Fed, I think it's today, is planning on to increase the interest rate. What's that going to do to growth in the housing market? What's that going to do to growth in buying big projects? You're going to start to see decrease because at one point, not too long ago, what was it, 2 to 3%? To borrow cash, and now it's going to be somewhere around 6+%. Now, by the way, that's actually still pretty good interest rates. It doesn't feel like that because we've been so used to these numbers here. But growth is a big influence over a company. Now, the big question for a company like General Mills is, how are you growing as everybody's feeling this pressure around inflation? Are people going to continue to buy products as you continue to increase pricing because your costs are going up? How long will that happen? They call it pricing elasticity, but it's basically that how long are you going to be able to increase price before all of a sudden the demand's going to go away? And that's what they're dealing with. Of course, people are the core of any business. And when we talk people, we're talking both that external customer, those that buy or use their products or service, but then also internally. How do we get better from an execution perspective? Well, folks, that's probably more of a review than you wanted, but that's the 5 drivers. Now, you can use this 5-driver model or framework as a simple way to assess both the strategic focus of the company and the financial performance. So that's where I want to go. I want to introduce you to the tool. As you go to listen to these earnings calls, how can I use the 5 drivers as a resource to truly capture the key information on what they're talking about, why it's important, and what can I do about it? If it's my company, if it's a company I'm selling into, what can I do to create a greater partnership? Or if it's just me as an individual investor, what should I do based upon what I know? So the first tool that we talk about is called the Executive Alignment Activity. And for some of you who may have gone through this before, for those that are new, let me walk you through it. Here's what you're going to do. Anytime you listen to these calls or read the transcript, every time you hear something about cash, you put a little slash mark. Every time they talk about EBITDA or profitability, increasing prices, I'm going to put a profit metric. Anytime they talk about new products or divesting of assets, buying new assets, I'm going to put a slash mark by assets. Same with growth, people, etc. At the end of that call, you're going to have all sorts of slash marks throughout this document. It's just a simple way to take that framework and quickly assess, kind of gather the key nuggets of what they're talking about. Once you're done with that, you then go in and you actually answer these 4 questions. Which business drivers seem to get the most attention? I love the second part of it. And why? What's going on in the industry? How does competitive landscape impact it? What about regulation, commodity pricing, etc.? What were the 2 or 3 main points the executive was trying to make? What are the goals, the trends, and objectives going forward? And then most importantly, because it's an earnings call, what are the key questions being asked by the analysts? How should I think about those questions and what's being communicated there? That's what this tool can help you to do. Now, don't worry if you're saying, Brent, I've never been through one of your programs. How can I pick out this cash, profit, asset growth, or people driver on your little 5-minute review? Well, right here, I give you the definition of it right here. So you don't have to memorize it. It's right there in the tool. Not only that, I give you what I call trigger words. These words right here, if I hear them talk about dividends or distributions, I know that's going to be cash. They're talking about buying back stock. That's cash. And actually, it could be people as well because investors love that. Debt, issuing a stock. These are all trigger words around the cash driver. If I hear anything about EBIT or EBITDA, net income, earnings, margin, I'm going to think profitability. So you don't have to be an expert to be able to be comfortable. I give you the tools there. Once you answer those questions, The last thing that you'll do on this is just kind of see after the call what's happened. How's the market reaction to what they're communicating? Do you see their stock price drop dramatically? If they do, that says the market isn't really excited about the results they performed. If it jumps up, obviously the market has an interest. There may be other factors they're looking at, but it's a great way to kind of assess how's the market respond to what's been communicated. So that's the tool called the executive alignment tool. Now, we don't have enough time to go through an hour-long call and go through this. So what I want to do is I've got 3 quotes, and I want you to practice. So open your chat box if it's not open. I want you to tell me which of these drivers are they talking about, and then I'll show you. I filled it out for you as I completed the exercise. So let's go ahead and jump in. Here is the first quote. So we're going to do this first one together. So have your chat box open. This comes from Jeff Harmening, their CEO of General Mills. He says fiscal 2022 was another successful year for General Mills, marking the 4th consecutive year that we've delivered results that met or exceeded our targets of top and bottom line growth and cash generation. What drivers on this, just that first sentence, which of my 5 drivers on the screen are you seeing there? Which of the 5 drivers are you seeing? Yeah, it's pretty easy when the word's right there, growth and cash for sure is going to be there. Profitability, when you talk about top and bottom line, those are typically referring to on the income statement. The top line, that's your revenue or sales. Bottom line is going to be your profitability. So profit, absolutely. Okay, excellent. Let's go to the next sentence. I'm proud of how our execution outpaced our competition in a highly volatile operating environment. Which of the 5 drivers? Now, this one isn't as clearly articulated as growth and cash. What driver seems to rise to the top on that sentence? I'm proud of how our execution outpaced our competition in a highly volatile operating. Yes, definitely that people. He's talking about our team. It's General Mills outpaced our competition. And the operating environment, growth obviously can be impacted, profitability, etc. Okay, you're seeing how this works. Let's go to the next one. Though significant inflation and supply chain disruptions put pressure on our margins, remember that's a trigger word, we responded quickly to address those challenges and keep our brands on shelf for our retail customers and consumers. So yeah, margins of profit, a trigger word, assets and people, excellent. Yes, you think about keeping my brands on the shelf for who? Our people, our customers, and our consumers, absolutely. And finally, we did this while taking significant steps to reshape our portfolio, announcing or closing 2 acquisitions, 5 divestitures during the year. Definitely some assets there. Portfolio jumps to assets as well. Well, folks, you see how it works. Now, one of the things I want to share with you, it's not an exact science, meaning if you and I were to go through and mark this individually, we may not have the exact number of slashes on each of the 5 drivers reading this paragraph. That being said, as we do about 1,000 of these sessions a year or more, invariably the top 2 or 3 of the drivers always are at the top. Everybody in the group, when we teach a class of 20, they'll have the top 3 consistent throughout their groups. The point is really just take this big, wide, broad swath of information and say, what can I use? What are they? Okay, they're really talking about. Just looking at what you see in the chat box, assets got a lot of time. Growth got a lot of time, and people. A little bit of profit as well. Okay, I start reading through this, you start to see patterns of what's going on. So let me do the next one. This is from their CFO, Kofi Bruce. You do it. Just read through, and in the chat box, tell me which of the 5 drivers stands out to you. Give you a minute to do that. Which of the 5 drivers are you seeing as you read through their CFO's communication to the analysts? Okay, we're seeing a lot of growth for sure. Sales, what's sales? Sales is going to be part of profitability. So profit and growth, there's a lot of profit and growth. Where am I seeing that? Net sales, that's a profit metric. Of $4.9 billion, we're up 8%. That up right there is our growth, right? Organic net sales grew. There's a lot of profitability, a lot of growth you're seeing in this one. Adjusted earnings per share, that's a profit metric right there. Again, growing. So a lot of growth, a lot of profit. Obviously, the outcome of this is you're going to start to impact cash for sure. Pricing mix, that's profitability as you look at some of that down at the bottom. Well, not only do you have members of the company, their executive team communicating, but you also see it in the analysts. So this is Andrew Lazar from Barclays. He's a managing director, and he works in the food industry. He analyzes food companies, and this is what he says. Go ahead and review there and see which of the 5 drivers do you see standing out in the communication from the analyst. Which of the 5 drivers do you see in here? Some trigger words I'm seeing. Pricing is a trigger word for me. Jump in inflation. Supply chain stuff. This HMM is an acronym for Holistic Margin Management. It's how are we protecting our margins. As inflation, the cost of getting our products and services out the door increases, what am I doing to maximize that margin? And of course, they have another one, SRM, which is Strategic Revenue Management, and that's their price increasing. Of course, you got profit down here. Yeah, so profit definitely there. You got growth in there. You got some assets as you're dealing with inflationary supply chain type issues, etc. Well, folks, that's how you do it. Pretty simple. You listen to the call. All you're doing is trying to get that information captured. I went ahead and did it for you. So this is my results. I went through the whole call, and you'll notice I break them up in prepared remarks and analysis. You don't have to do it this way. The reason I like to do it is I can compare the two and see where they're in alignment. Definitely profitability is important both for the company as well as the analyst. Versus growth is a big focus what the company's talking about. You're seeing less questions or conversations around that from the analyst community. Very similar kind of focus between the two groups here. But in the end, all I'm trying to do is get that number because I got to answer 4 questions. And the first question, which drivers seem to get the most attention and why? Let me go back. I lost my thing. So we've got for sure profitability, and the second one is going to be growth for sure. So here's the document filled out with my answers. Let me walk you through them. The first thing they talked about was which drivers seem to get the most attention. Obviously, you saw the document. It's going to be profit and growth. So why? Why is profit and growth there? Well, first of all their key metrics are growing. They see great expense. Now, one of the things I like about a slide deck is a lot of times I can look at the slide deck and see this information. So, for example, their profitability and growth, why is it growing? Because they're having great success. They are increasing their pricing. They've been able to mitigate all the inflationary expenses by cost management and increasing pricing, which allows them to have growth in a tough time. And here's their numbers. Here's a slide right out of their deck. So on a quarterly basis, their net sales grew by 13%. On an annual basis, they got 6%. And this CAGR is compounded annual growth rate. So for every year, they're averaging about a 5% growth. That's a positive thing. The market likes to see that. You can see that operating profit. Remember, this is EBIT. Their key profitability on how profitable are they on the things they can control. For the quarter's up 21%. In fact, there was another slide that showed Q4 for them, which is the 3 months ending in May, was actually some real nice growth numbers and everything they were doing. The question they're starting to talk about is more people starting to eat at home versus eating out because of inflationary pressures, which means they're going to buy more groceries, right? Earnings per share growth as well. So great. Why are they focused? Because they're having great performance, and that's what the market wants to hear. But why else are they focused on profitability and growth? Let me give you a few other things that stood out to me. Number one is the inflationary impacts. That's something everybody's talking about. As you listen to the analyst questions, when I get to that one, everybody's asking about it. They're forecasting next year inflationary for the products they have to, the raw materials to produce their products, they're expecting or anticipating 14% inflation. Now, they're not saying that across the board. They're looking at the goods that they need to bring in to produce. They're estimating about 14%. So why is that getting so much attention? Well, if really your costs are going up next year, or basically right now at 14%, how can you survive? How can you make money unless you increase? If my costs go up by 14% and I don't increase my price, I'm not going to make it. So they're increasing price. Now the question is, how long can you do it before consumers won't want to buy? So significant inflationary impacts on cost side of the business. Obviously, supply chain issues is a big thing. So how is that impacting your growth? And so far, they've been able to kind of withstand some of the supply chain. So what's their solution? Expect holistic margin management, that's the HMM, and strategic revenue management, SRM, to offset inflation. So they believe by increasing price and managing their costs, that 14% inflation that they're thinking they're going to cover that. So it's not going to have an impact on their margin. Now, they still have supply chain issues, getting access to stuff that might impact that. But those two tools is what they're focused on. So very big in their industry right now is inflation's impacting everything. And as my costs go up, what do I do on the pricing? Now, as a consumer, we want them to keep it. The challenge with them is if they don't increase the price, in the end, they're not going to have the revenue or the cash flow to be able to grow their business. And that kind of leads to the last. So why profit and growth? Because right now we live in a very dynamic environment that's impacting their business, much different than anything they've dealt with in the past. So what were the two to three main points? Now, what's again what I love about these earnings call slide decks is often they give. Here's the 4 things they said, key takeaways. Deliver strong performance in 2022 by executing well in a volatile operating environment. So look, tough times, and we did good. Executing significant portfolio reshaping activity. What they're doing is they're looking at those old products that have low margins, are not growing, they're getting rid of them. They got rid of Yoplait yogurt. They got rid of Hamburger Helper products and some other things. They got rid of them. And then they brought some more high value products on their portfolio to increase their margins as they move forward. Continue to drive our accelerated strategy in fiscal 2023 and announced a 6% increase to the quarterly dividend, getting more money back to investors, which they love. Let me do a little deeper dive on what they kind of communicated around some of these. So delivered, what they get done, continue compete effectively. What we talked about earlier, their performance versus competitor, successfully navigate the dynamic supply chain environment. They're able to manage for fiscal year 2023. They right now have 55% of their input costs are already contracted. That means they still have to get 45%, but it's at the start of the year. They're already set up to cover 55% of their costs right at the beginning from a supply chain issue. That's a real positive metric for them. And then, of course, they're looking at reshaping. So each one of these, what are some of the things? Continue to compete effectively. They're getting holding or growing their market share in key categories: cereal, pet foods, and Mexican, as well as the dough, fruit snacks, and frozen dumplings. Basically what they said is, look, during this pandemic, so we're coming out of it, they're increasing the amount of people are buying their products or maintaining their market share versus other company losing market share. Not only that, they continue to strong sustain share gains. General Mills, priority business, holding, growing. So continue to improve their gains as a company as well. What else do we see them talking about? As they talk about navigating dynamic supply chain issues. They had a little bit of dip around their dough, pizza, and hot snacks that you saw. Oops. But during this challenging supply chain issue, you look at most of their products, they didn't have a real dip of availability. They did have a little dip on the dough, pizza, and hot snacks that you saw in Q3, but they've resurrected that, and they're in a stronger position as they move forward. So dealing with these challenges around supply chain, inflationary, they've been able to outperform, which is a real positive for them. And then as they look at reshaping their portfolio, they acquired these products and they got rid of these products. And again, they divested these kind of low margin, low growth opportunities, always trying to have the best products available that they're providing their customers and their consumers. Not only that, as you look at different parts of their business, looking at how they structure their organization to improve competitiveness, agility, and profitability within the company. So what's their goals, trends, objectives going forward? Well, the environment's going to continue to be dynamic. We're going to have record inflation, continue that kind of economic volatility. Can we continue to increase price to overcome the inflationary pressures, or are we going to struggle around that? Continue to have disruptions on supply chain. Right now, they're 55% kind of scheduled already. So they got to get the rest of that, make sure they're on top of supply chain issues. And then, of course, globally continue to have ongoing impact. So what are those goals and trends based upon that? Three things. Number one, continue to compete effectively within their group. Continue to invest for the future and continue to reshape our portfolio. So here's some of the context of that. Not only will we continue to have at least a 5% annual growth rate, they think it's going to be a higher annual growth rate. So continue to compete. And here's some of the products they see real opportunities for growth and gathering more or capturing more market share. Continue to compete effectively and relentlessly innovating with new products, new opportunities that they're providing. And in the end, here's some of those financial outlooks. As they look at their goals for 2023, they expect organic growth to be 4 to 5% growth and possibly even higher, they're suggesting. Not willing to go on record on a number, but in that prior slide, they talked about even getting a better growth in their top line. Of course, their operating profit growth, -2 to -1. Of course, why a -2? Well, inflationary impacts, that they can't deal with that. And how long can I keep increasing my price before I can't overcome inflationary constraints? So that will be interesting to see. Flat to 5% on their earnings per share numbers, and free cash flow conversion about 90%. So that's where they're headed. What are the concerns, questions raised by the analyst community? This was quite interesting. A lot of concern around inflation. Huge impact. How long can you continue to increase price before customers aren't going to buy? Was a big conversation point of analysts. What is your strategy to combat high inflation and supply chain issues? What are you doing around that? Of course, they talk about the various cost management as well as margin protection that they're focused on. Other questions that they highlighted is, can it really overcome a 14% inflationary number? Can our holistic margin management and strategic revenue management really overcome a 14% inflationary number? When do you see things getting back to normal? What was the last kind of focus there? Majority of it by far were these two right here. How are you going to combat some of these challenges, supply chain and inflationary constraints? So folks, that's the tool, all filled out. So what do I know now? I know a heavy emphasis around profitability and growth. What's the potential challenges? Inflationary constraints and supply chains. What are they doing about it? They got a clear strategy around increasing price to, as well as managing costs to overcome the inflationary, and then get really good at their supply chain to mitigate the risks that they have out there. Be able to have the products ahead of time that allows them to get them into stores quicker. So that's a big emphasis. From there, I jump to the next tool. The next tool is called the Navigating the Financial tool. With this tool and any company's financial performance, you can quickly assess their financial experience. So let me show you how it works. On the left-hand side, you have the 5 drivers: cash, profit, asset growth, and people. Right next to it, I've got the key metrics most companies will track. Now, your company may have some unique ones. For example, you might have a metric like an EBIT number. And that would, of course, would be down in the profit section. These are just generic terms that you can use on any company. My recommendation, if you want to look at your company, figure out which one they do. For example, General Mills does operating income, which is EBIT. So I can do an EBIT margin by taking their operating income number divided by revenue, just like I'm doing down here for my net profit, and I can see how well they're doing on that metric. So not only do I have the metric, but I have what line items you look at in the financial statements. The genius of this tool, in my opinion, is right here. It tells you where to go. We don't have time to show you how to read the financials. We do that in our course. If you want to sign up, love to have you. We'll walk you through that. But if you've forgotten or if you've never been through it, it tells you where to go to find the numbers. If there's any sort of calculation you have to do, you have it right here. And you have two periods of time. So I can look at the current performance versus a prior year versus a comparison company, however you want to look at. So here's what I want to do. I want to walk through. We can't go through all of these, but let's do a few together. And so have your chat box open, and I want to walk through the first 5 of them together, okay? So help me out. I want to get my cash and cash equivalent. That's the line I'm looking at. Now, what statement am I going to go to find it? Put in the chat box. I want to make sure you're comfortable using this. What statement do I need to go to access the cash and cash equivalent metric? Put in the chat box. Excellent. Yeah, the balance sheet. Oops. Let me go forward. The balance sheet. Okay, well, you don't have the balance sheet, but guess what? I do. Here's the balance sheet. I'm looking for cash and cash equivalent. For those that have been in my course, the balance sheet is listed by those things that are most liquid down to least liquid. Of course, most liquid is going to be cash. So as you look at the cash number right here, it's cash and cash equivalents, the metric we're looking for. Here's the number, 569.4. Now that's $569.40, right? No, it's in millions. That's going to be 569,400,000 ish is the number we're looking at there. So I go back, I plug that in, 469. You see how we do that? Okay. So the next one I want to get my cash from operation. I'm going to look for that metric, net cash provided by operating activities. What is the cash flow? What is the statement I need to go to access that? Look at my statement section. What do I need to find? Cash flow. Okay, I'm not going to tell you the number. I'm going to go to it. You see if you can find it. The term we're looking for is net cash provided by operating activities. About a third of the way down. When you see it, put it in the chat box, would you? There you go, Crystal. Excellent. Right here. Here's the number. In fact, Warren Buffett says this is the most important number on a financial statement. That's the cash they generate from their core business. So I jump back to my statement. I put that in. I got the first two done. Let's jump to the profit ones. I've got to get my total revenue as well as I've got to get my net income because then I'm going to do a calculation. What statement do I need to go to get all three of those? 3, 4, and 5. What statement am I going to? Excellent. Go to my income statement. So here we go. I've got to get my revenue or sales number. Can you see it? We call it net sales here. What's the number? Put in the chat box. Just see if you're comfortable seeing it. Net sales number. There you go. That's 18 billion. Remember, this is in million. 18,992. Let's see. 18,992,800,000. Notice what it's done year over year. We see an increase. We like to see that. That's positive. So that's the number we plug in here. Now we got to get that net income number. So here's the top line. Net income is also known as a bottom line. Oops. So right down here is that net income number, 2707. Okay, so now you have the numbers. You bring them back. All you're going to do is move this number down here and move this number down here. I'm taking my net income divided by my total revenue, or net sales is the number we're looking at. So take the 2707. I'm then going to divide that by the 18,993. So the one calculation I'll have you do, grab your calculator, type it into your calculator, take 2707, divide by 18,993, and give me the number. Multiply it by 100. It says multiply it, or you just move the dash, the decimal point 2 places. Brad, looking good. Anybody else want to confirm Brad's? 14.25 going once, going twice. Oh, it looks, we got it. There you go. I rounded it up to 14.3, but it probably was 14.25. What does that say? That says for every $100 of revenue or sales that General Mills brought in fiscal year 2022, they generated $14.30 of profitability. Is that high or low than most companies? Anybody happen to remember? 14.3, is that high or low than most companies? S&P 500, for example. It's actually higher. S&P 500 is about, well, it's usually around 10%, but in 2021, it was about 12%. Even then, it's outperforming either one of those. It's pretty good. That's what you're paying a premium on the products you're buying there. Well, folks, I don't have time to go through everything. So what I did is I completed the rest of fiscal year 2022. And then I did it the same thing for 2021. It's a great way to kind of see what's going on in their business. I'll notice, for example, that revenue is up. They love to see that. Not only that, is my net income is up. My margins are up. These are all positive metrics for investors. You can see what percentage growth I got year over year. So you can use this tool to compare quarter over quarter, or in their case, because it's a full year over full year experience. Not only can you do that, you can compare it against competition. So here's Kraft Heinz. You'll notice revenue. Kraft Heinz does more in revenue, but yet their margin is much smaller, what you might typically expect for a food producer. Definitely General Mills is getting a better pricing on their products versus what Kraft Heinz is doing. Not only can you do that, you can compare it to any company. For those who were with us last month, we did Costco. So here's General Mills numbers versus Costco. Obviously, Costco, much bigger, $195 billion, almost $196 billion in revenue versus General Mills, almost $19 billion. So that's the navigating the financial tool. With this tool and any company's focus, you'll be able to assess the financial performance. So where do we go from here? The last thing we got to do is to apply it. Now, application is absolutely important. Now, I've done this. What do I got? I got clarity around their strategic focus. Very focused on around profitability, minimizing inflationary pressures while being able to deal with the supply chain issues. They want growth. They don't want low margin products. They want high margin products. So I'm going to get rid of all my low margin products and buy or get access to a high margin product. I can see in their numbers, great financial position. Now, what do I do with it? Application is absolutely vitally important. For those that have been through our program, we have the chance to work with many great companies. And at one point, one of our investors asked us, one of our customers did a research to find out what sort of return do they get? What's the benefits of going through a business acumen program held at Acumen Learning? And here was the results of what customers got. 84% improvement in their performance of their business and function. 81% increase in collaboration, greater collaboration across different groups. 77% improved upward communication. Just think of how well, if you understood the company you're selling into or you're working with, how well your upward communication would align with what they're focused on. 77% improved employee engagement. 75% increased business focus, and 84% improved teamwork. The only way this happens, these results happens, is if people apply it. So if you say, Brent, this is kind of interesting, you don't do anything, there's this great quote says, to know and not to do is not to know. That's great. I've showed you how to do it. If you don't do anything with it, I've wasted your time. The greatest opportunity of growth and development is you take this tool and use it within your organization. So with that in mind, how do we apply it? For me, the last part of the tool is the application section. So what stood out to me? Significant things that I found out or learned from this experience. Number one, the significant challenges they're dealing with around inflation and supply chain. I just hadn't thought of it. Obviously, we didn't know that, but I just hadn't looked at it. It's significant. And their ability to overcome inflationary is a huge positive for General Mills. Strength of their financial margins. I was surprised at a 14% net profit margin. That's higher than the S&P 500 average. That was impressive to me. Obviously, their inflationary expectations of a 14%. Boy, I hope it isn't that high across the whole economy. That's pretty concerning to me. Obviously, they're focused on their business and what they're focused on. And then strength their performance in the storm. They got record inflation, economic volatility, all these things, and yet they have great performance. Absolutely. So what would I do with this? I would want to compare their performance to peers, see how they're doing with some of these other companies within their organization. I want to share this information with the companies I sell into, the companies I work with. And then, of course, I would love to work with General Mills. If you're with General Mills, we'd love to work with you and help your employees understand how to reach the goals you're having around reducing the inflationary pressures and supply chain issues. We'd love to be a part of that. The last step of the tool is to actually go have a conversation. You complete it, you go have a conversation with your manager if it's your own company. If it's a customer, go to your sales organization. How can we beat them to market, outperform our customers? And then, of course, the competitor benchmark companies as well. You can go to their sales team. Well, folks, here's my question to you as you wrap up today. First of all, remember that once you've done this, that becomes the notes as you go to the next quarter. Now that you've got the General Mills, if I was going to the next call, I would review what I captured in this tool that I'm going to give you and be prepared for that next call. So my question to you, the last thing I want to do is I'll make sure you get access. Who are you going to analyze with this tool? Put in the chat box. Are you going to analyze a company you work for, a company you sell to, a partner, a company you partner with, a company you invest in or interested in? Or next month, we're looking at oil and gas, Shell. Maybe you want to look at Shell and be prepared for our next call that will happen on August 24th. Well, with that in mind, here's what I want to do. I want to give you access to it. Go to acumenlearning.com webinar, Ginger, if you'll put that in the chat box, acumenlearning.com/webinar. You can register for the Shell call that will happen in 1 month from now. Not only that, you can access that workbook we've been talking for. The last thing I recommend, if you are looking for a refresher, maybe you've taken a course, it's been a while, you want a refresher, we'll give you $100 off our online program. It's 13 modules that covers the 5 drivers and the 3 financial statements, as well as the tools we talked about. It's a great way to review. If you've never been in it and you want to do something individual, highly recommend that. It will really set you apart within your organization. Then come back on the 24th. We'll walk you through how to look at these again. You'll get more and more comfortable with it. Well, folks, it's truly been my pleasure to spend some time with you. I think our time is spent here. I'm going to stay on and answer any additional questions if you have them. If not, thank you so much for your time and have a great day. Thank you, folks. Great to have you there. Again, if you have any questions, let us know. You got that acumenlearning.com/webinar. Make sure you access that workbook, sign up for the next program. And then if you're interested, jump on that online learning. It's a great program as a refresher. Or if you've never been exposed to this, it'll give you a great foundation as you think about your business and understanding it better. Ginger and team, was there any questions that were asked? Let's see. Will the financials be available via the link? Are you asking for the financials for General Mills? I don't know that they would be there, but I can put them in the chat box possibly. Actually got to do a share transfer. Here's what you do, Rich. Email me. Right there, and I can send them to you at bbarclay@acumenlearning.com. Obviously, just type into Google. If you don't want to send me an email, type into Google and say General Mills Fiscal Year 2022 financial statements, and it'll get you there. Great to have you, Rich. Thanks. Any other questions that we missed throughout the financials? Be in the link. Doing a quick review, make sure I didn't miss anything here. Okay, I'm not seeing any additional questions there. So one last time, if you want to access the workbook, go to acumenlearning.com/webinar. Our next webinar is going to be on Shell, one of the largest oil and gas producers, international oil company. Great chance to look at them on August 24th. And then if you want to access the online learning, seeing the big pictures, the title of that, go to that same link and you can download a discount of $100 off the cost of that training. Folks, it's truly been my pleasure. Hopefully this was helpful to you. Please encourage others to join us. It's a great way to build the capabilities within your organization, understand how to listen to these earnings calls, and build their business acumen. With that being said, thank you much for your time and have a great day. Ginger, let's go ahead and close it out.